We just got word that CPI, the U.S. measure of inflation, has reached its highest level since 1981. That's 41 years. On top of that, we got the Fed's Beige book saying that the U.S. economy is slowing in several parts of the country. In addition, we got the chance of a 100% basis hike becoming more realistic as homebuyers are backing out of contract at the highest level since the start of the pandemic. On top of that, we've got analysts coming out saying that we need a severe recession to cool the economy. So the question is the housing market as bad as the headlines read? And the easy answer is no. And in today's video, we're going to talk about what's actually happening in the housing market at the moment. Now, there are some things that are changing that aren't so good, but that doesn't mean the housing market is falling apart. And that's what I want to talk to you about today. Now, many of you watching the video are going to come back and say, Jeb, you're a real estate agent. You're just trying to sell houses. You're just trying to make money. That's the reason that you're touting about the housing market. No. I'm a real estate agent that will tell you it's not always a great time to buy a house. And right now, it's one of those times, right? There are definitely some things that you should be thinking about if you're considering buying at the moment. But at the same time, I'm looking at the housing market as a real estate agent, someone with boots on the ground, having conversations with buyers and sellers. And we're going to talk about what I'm seeing out there at the moment. We're going to talk about the changes that are happening, the shift in the market, how that might affect you as a buyer or a seller. And on top of that, we're going to talk about what you should do if you're planning on waiting to buy a house, some things that you have to consider. Now, one thing I want to start with early in this video is reminding you that real estate's local. What's happening in my market might be a little bit different than what's happening in your market. So just take it with some context, and apply it to your market. But at the same time, I want to remind you that a lot of YouTubers out there that you may or may not watch don't really have boots on the ground. A lot of them are reading headlines and just providing their opinion of what that headline means without actually digging deep into the numbers. And then there are some YouTubers out there actually manipulating some of the things that they show you to make their case seem more realistic, when in all reality, yes, things are changing, things are shifting, but the world isn't falling apart. So in order to start today's video, I want to talk about some of those things that are happening in the market, some of those shifts that are taking place. Now, if you've been in the market for any period of time, you know about these, but we're going to talk about how they're affecting the current real estate market that we're in at the moment. So we saw interest rates rise from the beginning of the year to now, pretty much going from around 3.4% or so upwards of 6.25%, and interest rates have retraced. Now they're sitting somewhere around 5.75%. So interest rates have gone up considerably, which has affected affordability. On top of that affordability being affected, we came through the spring market, right? The spring market is typically the time of the year when we see the most homes come on the market, and this year was no different. We saw inventory come to the market, which has allowed supply to build. On top of that, we've seen that affordability be affected, right? Where buyers can't afford to purchase homes. Some buyers have decided to take a seat and sit on the sidelines and wait to see what happens. That's allowed inventory to build a little bit more. And so in many markets out there, we're starting to see inventory levels rise back to levels that we saw in 2020. And that's a good thing. Now, if you're a seller out there looking at your house sitting on the market, yeah, I understand. There's a little bit more competition out there. Days on the market might be growing, might be taking a little bit longer to sell your property, but it's getting back to the norm, right? The norm of what we saw prior to the pandemic. And those times were actually healthy times for the real estate market. So at the moment, we've seen this shift in rates. We've seen supply build. At the same time, we've seen demand be affected because of those things that we just mentioned with regards to rising rates and more inventory out there. Buyers are taking longer to make decisions. And there's buyers that are saying, I'm not paying these prices. I'm waiting for foreclosures to happen. I'm waiting till the market crashes. And those people are likely going to be waiting for a very long time. And we'll talk about distress sales here in just a minute and what we're seeing out there with regards to foreclosures. With all of that said, we are still seeing properties go into escrow and close. Why? Because not everyone is afraid of the market. Not everyone is scared of the headlines. Yeah, the economy is suffering. There's a very good chance that we're going to head into a recession. The only reason we haven't gone into a recession already is because employment has remained strong. And we've talked about that, right? If you go around, you look at different restaurants, different businesses, many of them are hiring, looking for good employees. So as long as these businesses continue to look for employees, there's a good chance that employment stays strong, even though a lot of companies out there have halted hiring. And that could be the one thing that keeps us on the border of going into a recession or not. But I do believe a recession is likely on the way, mainly because of the Fed hiking these Fed funds rate, right? It's going to slow growth. And with slowing that growth, it's going to slow the economy. On top of that, you've got seasonality again playing a part. We're in that summertime when the market starts to slow down. The kids are out of school, people are taking vacations, and we're about to head into the slowest time of the year, which is that fall winter market. Now, that might seem crazy because we're currently in the middle of summer, but when you start to look at the kids going back to school here in the next month, and we're in August, right after you get over that hump of August and September is when we really start to see the slowdown happen in the market. Why? Because it's typically that holiday season where people put home buying on the shelf. People don't want people walking through their house because of illnesses, because of people being sick. And this year, sellers might have a relapse of memories of COVID and not want people walking through their property, potentially getting them sick. And therefore, the market is going to continue to slow throughout the year. But that's also a time of year when inventory, that's not selling is pulled off the market. So we're going to continue to see inventory build and demand likely slow through the better part of September-ish, at which point you're likely to see inventory levels come back a little bit and demand is going to continue to falter lower unless we see some resurgence with regards to interest rates. Now, what do I mean by that? Well, we saw interest rates go as high as 6.25%, and since then we've seen them retrace somewhere around 5.75%. And with the recent release of the CPI numbers at 9.1%, which was higher than expected, interest rates remained pretty stable. They went up a little bit in the morning along with the 10-year, but both ended up retracing by the end of the day. Now in June, if you remember, when we got higher than expected inflation readings, interest rates shot up considerably, but the Fed was able to come out and do their Fed funds hike about a week later, and they went with 75 basis points, which helped calm the market, and interest rates ended up retracing. Well, today we got higher than expected inflation readings, and the market pretty much took it in stride, which could mean that we're somewhere near the top of interest rates. Now, I've talked about this in other videos. Can interest rates go higher? Absolutely. But I think there's a chance that as we move into the fall, if inflation can get under control, if inflation can calm a bit and the Fed continues to be aggressive on the Fed funds hikes, that interest rates could end up retracing, which could give the market a bit of resurgence in the fall. And if you see rates retrace, then home buyers might come back to the market. But if that doesn't happen, you're likely to continue to see a slower market, one like we're in right now. Now, with that being said, what I'm seeing out there with regards to sellers and buyers, I'm seeing sellers still want their price. They're willing to reduce or improve their price, if you will, by lowering it. But many aren't willing to give away the house, so to speak, right? Sellers still have an idea of what their home is worth, and many of them don't have to do anything, right? They're testing the market to say, hey, listen, if I can get this price, I'm willing to sell the property. But if I don't get it, then I don't have to sell. In fact, I have 2 different clients like that at the moment that don't have to sell their properties. Now, if they end up getting their price, they are sellers in this market. Why? Because both have other homes. They don't need this particular property. They don't need to move into something else. They have a property where they can go. And that's one reason why I still believe that prices are sticky to the upside. Many sellers aren't going to let their houses go because they've seen what they could sell for, and that's the number that they have in mind. Now, they might be willing to sell it for less than that, but many are going to hold pretty firm on their price. Now, with regards to buyers, I've seen some buyers come in and want to offer significantly less than the asking price on properties. And I've had a buyer do that on 2 different properties. On neither of those offers did they get a response. The seller didn't respond to either of them. And what's funny is both of those properties ended up selling to another buyer who put in an offer, likely higher than this buyer. So buyers out there looking to put in offers well below the asking price aren't really making any headway in my market. At the same time, I've got buyers putting in offers on properties somewhere near the asking price, and they ended up in a multiple offer situation where those clients ended up paying the asking price for that property. But the biggest difference that's changed in the market with regards to buyers is they no longer have to do this craziness that they had to do 6-8 months ago, right? You can still keep your contingencies in place. You can still keep your appraisal, your loan contingency in place. Many sellers out there aren't asking for you to remove this stuff. Why? Because in many cases, you might be the only offer. But with that said, even though you're the only offer, that doesn't mean you can go in with a lowball offer. Or I guess you can, but it doesn't mean the seller is going to accept it. And that's what I'm seeing in my market, right? I'm seeing price reductions happening. I'm seeing homes sell for less than the original asking price, but I'm not seeing any significant deals on properties. I'm not seeing any deals that I'm wowed by, when they end up closing escrow. It's pretty much typical of what you expect, which is a market similar to the one prior to the pandemic. And if you're looking at numbers and comparing them prior to the pandemic, we have significantly less inventory as a whole than we did during that time. So inventory is still lower. Even though it's building, it's still significantly lower than that 3-year period prior to the pandemic, which was a very strong market. One that favored the sellers, but not quite as much as the last couple of years. And what we're likely seeing here over the next couple of months to couple of years is a more balanced market, right? One where buyers can come in, offer less than the asking price. In some cases, maybe get a deal on a property by some percentage, but nothing significant. We're not talking 15, 20% deals on properties. I'd be surprised if you get a 10% deal on a property based on where it closed, unless you have a super distressed seller. Now, earlier in the video, I mentioned we would talk a little bit about distressed sales, foreclosures. We're not currently seeing any real foreclosures come to the market. Yeah, there are some that are occasionally hitting the market, but here in Orange County where I'm located, 3.3 million people. As of today, around 3,800 properties on the market. We had a total of 6 distressed sales. And guess what? All of those people were distressed prior to the pandemic. So these weren't foreclosures that resulted from the pandemic. These people were already in distress prior to the pandemic. The pandemic just allowed them to stay in the property longer, and now they're at a position where they're foreclosing. So if you're a buyer on the sidelines waiting for that opportunity, I would tell you it's probably not going to happen. So what do you have to think of as a buyer in this market when you're considering all of this information that I've just thrown out there? At the beginning of the video, I mentioned it's not always a great time to buy a house, right? As home prices have reached crazy levels and inventory is building and demand dropping off, there is a chance that you see the market move sideways, decelerate, less appreciation. Some markets you're going to see price declines. So you got to have a longer term time horizon. If you're someone looking to buy a house and sell it in a year, 2 years because you want a house hack, or because you heard your neighbor did it last year and you want some of that money, that appreciation, that's not the reason to be buying a home. You need to buy a home because it's the right time in your life to do it. Now, I talk about this often and people get tired of hearing it, but that needs to be the key driver in why you're buying a property. You're starting a family, you just got married, you're moving across country to start a new career, and you need a place to live, and it's more cost effective to own than to rent. These are reasons to own property versus just trying to get rich and looking at your property as an investment. On top of that, you want to make sure you have money in the bank and you're not stretching yourself. So to summarize here real quick, the housing market isn't falling apart. Yes, the economy is weakening a bit, slowing down. The housing market is slowing down, more inventory is building. Demand is slowing down. In some cases, you're seeing price reductions on properties and you're able to get them for less than the asking price. But in no way does that mean we're experiencing a housing crash, because we're not. So if you're a buyer out there, just take that into consideration. If you're a seller, the market is changing. You might be missing your opportunity to maximize price in the short term. So just make sure you're working with a professional when you're doing that. And lastly, I'd like to ask a favor. If you found any value in today's content at all, hit that thumbs up, subscribe to the channel, turn on the bell notifications to be updated anytime I post a video. But for now, I appreciate you taking the time to watch. I appreciate your support. Hope to see you again soon. Have a great day. Bye-bye.